I mean, earnings growth, Kevin, it's no secret. I'm not going to break any news here that mega cap earnings growth is accounting for all of the earnings growth, or the great majority of earnings growth this quarter, which is no surprise why people continue to go to those stocks. Hello, Apple. Now, I get that, their revenues declined, fifth time in 6 quarters, but services revenue rose 14.2%. That's a new record. China revenue, yes, it declined, but it was way better than feared. And then a mountain of a buyback, the largest ever by any company ever. $110 billion. It goes sort of also to what Tony Pasquarello suggests, the reason why you want to stay with these stocks, because they're the ones who are buying back the most stock. That matters.
Well,
but on the earnings growth idea, where else are you going to go?
Well, I don't know that the earnings growth for Apple supports a 20, move 20 sticks in a week, right? So it was last Thursday we were talking about adding to the position at 165. Today it's 185. So that's a big move, and I don't know that the earnings really justify that. We're excited about the developers conference and the prospects for AI. The $110 billion share buyback is massive, a 4% dividend increase. We own the stock, but what we did this morning at the open is we wrote a covered call on Apple, because there's a big move, maybe a little bit too much too fast. So to harvest that volatility, it gives you a very modest hedge, and I think that's something that anyone that owns Apple should think about doing.
Let me ask you this. Does the trough deserve a 20 stick? Is this we're going to put our flag in the sand here and say this was the moment that we're confident that Apple troughed, both in their revenue, both in China, both in, they haven't even talked AI yet. I mean, they sprinkled it, but
it's coming.
They're going to deliver the entree in June.
It's
if not now, when, I guess, is my point.
Earnings. I mean, I still thought that we were going to see it get to 155. I mean, I said that last week also. So sitting here bragging that it's up this much, we thought there was still some weakness there. But when you can never pick ultimate bottoms or ultimate tops, so anywhere between 150 and 160, that stock's a buy. Between 190 and 200, I'd probably take a little off the table.
Apple would have no earnings growth without their buybacks. It's all financial engineering. So while I deserve that companies that have fortress balance sheets and can do accretive acquisitions of their own stock, that's great. But what do you pay for that? So I pay a premium for the brand, and that's it. So I don't have to own Apple. You don't have to own Apple. Apple will be an underperformer in my estimation going forward. They are not going to be a primary AI play. Period. End of story.
Why not?
Because they won't. Because you've got Microsoft, who has pricing power.
They're a different kind of AI player.
They are, but I'm taking who's going to. If you ask the question, as you have in the past, who's going to benefit most from AI? And I'm paraphrasing, and I'd say that Apple's not even in my top 5 or 6.
Yes, but you're talking as if it's an apples and orange conversation, I think. You're talking about a product company and services, obviously,
right.
But AI may very well be what leads to the next great refresh cycle of a company with the strongest installed base in the history of consumer products.
See, I don't think it will.
I think it will.
I don't think it will. I think look, they have a big installed base, right? They have big market share in some markets.
They have the best.
No, they don't. Globally, their market share is a fraction of what Android is.
But they have the best installed base. I mean, let's not kid ourselves.
They have a pretty good installed base. I'm not going to argue that. My point is, despite that, that's my point. Despite that, their prior refresh, remember 10 was a disaster relative to expectations. I just don't think that's how you play it. I'd rather pay a software company like Microsoft with recurring revenue, with significant pricing power, rather than relying on the telco companies to subsidize the phones. So my point is, look, I don't think, when I look at mega cap, I don't want to own all of them. I nearly do. But if I have to pick and choose, and you're classified as mega cap, this is the last one on the list.
Kevin, I know you're taking the other side of that.
Yeah, you have to, because the refresh cycle is the story. Like, there is no debate. I don't know anyone that has an Android. Even my dad has an Apple phone, and I don't think he has a computer. So you have to look at this and say the opportunity set is beyond anything we've seen before. I own Microsoft.
Is that in the numbers, though?
I think that there will be an increase finally in their revenues, because if you look back 6-7 quarters, it's done nothing. I mean, it just stalls. And your point is completely spot on with the share buybacks, no doubt about it. But to think that AI can't be a major contributor to Apple's next phase, I think it can, and I think it will be.
If you look at the big tech buybacks and the new authorizations, okay, so it's $110 billion from Apple. I mean, Google's $70 billion. That's a new authorization, Steve. I mean, you can pick on that. Meta's $50 billion. You own Meta, $50 billion. Microsoft, theirs unchanged at $13 billion. It is what it is. These are the companies with the mountains of cash. What are they going to do with the cash?
I like buybacks, but I like the fact that that Meta's increased unlike the market, increased their spending in AI by $10 billion. That's going to be much more accretive to earnings and have longer staying power than a share buyback, which they also have.
Yes, but
if you rip out the share buybacks, they still have great growth. Apple hasn't had that growth in a long time. We can say 6 down quarters. You can go further back and see it's been flat for a long, long time.
I just think, you're going to look at a moment like Tony Sacconaghi upgrading the stock for the first time in 6 years, ahead of the earnings, by the way. Yeah. Good on him. Buy the fear is what he said. And that's, obviously by virtue of the stock performance today and the earnings last night, seems to be a good call.
I think the buyback buys them some time, Scott. I mean, look at the second half of the year and think about this refresh cycle. Think about the rationale for why. I think AI needs to become more relevant for the installed base that Apple has in order to support the eventual refresh cycle. And so I think that if you think about product evolution and what they're working on, they saw what happened to Meta. If they had gone out and spent a bunch of money or announced a huge CapEx to nowhere at this juncture, that wouldn't have been the right thing for them to do. So they introduced this enormous buyback. They buy themselves some time so that they can figure out what their AI story is going to be from a product perspective and how they can make AI relevant to their installed base. Services were up 14%. They need people to buy the new phones. I think this is a second half story, because I do think there's going to be a show me aspect to this, but I think Apple management did the right thing to buy themselves some time.
The street's all bulled up today, by the way. Citi has a 90-day positive catalyst into WWDC. Eric Woodring of Morgan Stanley, who's going to be with me here at Post 9 for his first reaction on closing bell today, he's raised the target. It's hard not to be more bullish. JP Morgan, they raised the target. Melius raised the target. It's time to buy, they say. Ives is bullish. I know that's not a shock to anybody, but he's reiterating that. But B of A reiterates it. Goldman, Evercore, Bernstein, Ray J.
Yeah, and I get it. And look, there's nothing wrong with owning Apple, but again, I've got to pick and choose where I'm going to get the best performance. And to me, if what you're saying, to read into what you're saying, if Tim Cook didn't come out and wanted to talk about, spending on AI, but said, hey, look what happened to Zuckerberg and Meta, so I'm not going to do it. That's no way to run a company. He's running it quarter to quarter. Think longer term. Who cares what the market does in one quarter?
You're telling me, how many rabbit holes do you want to go into? You're telling me that Tim Cook is running Apple quarter to quarter?
No, I'm saying what was the comment? That's what you said.
I think you're responding to what I was saying was, I do think that they're going to have a very well articulated AI strategy. There's no doubt in my mind that Apple's going to have that. I think in this moment, however, the inflection point for them is they came into an earnings season where China wasn't as bad as they thought it was going to be, where they had strong services, and they had plenty of cash to be able to announce this buyback, which, to Scott's point, matters right now. People want to see capital coming back to them. This isn't 8 years ago where people were like, why aren't these big tech companies spending on growth initiatives?
Now they're giving you dividends.
They want to see you back.